Well, I think we're ready to get started for the deep dive this Monday morning. It is June 24th, last week in June, 4th of July next week, but excited about the deep dive and getting this week going, talking everything about what's ahead for the second half of this year. So glad you're joining us. We're going to give it just a minute for folks to join so that we can get everybody on here before we start the deep dive. I'll follow along as always. Love seeing where people are watching from. So let us know that where you're watching from, so that we can say hello and get the deep dive started. This topic, what's ahead for the second half of the year, I had a chance to do it on Friday morning on the listing challenge with Tom Ferry. There were so many folks that were on that. And I think it's a question that many are kind of looking ahead, saying what will be ahead in this year for real estate. We've been through almost the first half of the year, starting the second half of the year. We talked a little bit about that last week for the election cycle. What's typically happened in an election cycle. Now we're going to give you all the forecast, all the information, everything that experts are saying about the second half of the year. So if you're there, let us know where you're watching from. Certainly want to see that, and I'll try to follow along here if I can figure out how to, and love seeing everybody from all over the country joining as we get the deep dive started. So, all right, I'm here fooling with Facebook, trying to check in with you, but everything coming up for the remainder of this year is in these forecasts. Like we always say, most agents know what's happening. The good agents understand what's happening, but the great agents can explain what's happening. And here's where I think this is critically important right now as we start this deep dive. I think it's important that we understand, everybody on the deep dive understands what's happening from a national perspective in real estate. You have access to all of that through KCM and everything that's going on in the national real estate market. Also with KCM Local, you have everything that you can access in your local market, right? And you can add that to your expertise. I understand, if I'm talking with someone, I understand what's happening nationally, but let me show you what's happening locally here in our market. And that is so important right now. I cannot get comments working here, so we'll keep going. But here's what I would say about that. In most markets, we're seeing inventory rise, seeing it rise at a quicker pace on the higher end of the market, but certainly seeing sales slow down. And we'll kind of start from that perspective relative to sales. But again, all these slides available to KCM members to use to be able to explain this market and everything that's happening. So I'm going to start off here with a quote from Lawrence Yun. He says, home sales have lingered at 30-year lows, and since 70 million more Americans live in the country now than compared to 3 decades ago, it's inevitable that sales will rise in coming years. Inventory will grow steadily from more home construction and various life-changing events that will require people to trade up, trade down, or move to another location. So what Lawrence is saying here is certainly home sales at these low points. There was an article written by Lance Lambert. It was in Fast Company that sort of compared sales this past April to sales in April of 1978. Very, very close. Obviously, there are many, many more people that live in the country now than back then, whether you take Lawrence's example or you take the Lance Lambert example, and sales have slowed here. So what is the forecast for the second half of the year? This is a topic that on home sales, I don't know that many buyers or sellers maybe wonder about that, but many of us in our business, we wonder about that. How many homes are going to sell? We sold 4.1 million existing homes last year, 4.8 total homes sold in this country. The 2024 forecast right now from Fannie, MBA, NAR, right at about average about 5 million home sales. Let's call it just about what we sold last year, depending on where this all lands. Remember I said 4.8 million homes sold in this country last year. The average of the forecast right now, 5 million homes sold. So a market that looks from a transaction standpoint a lot like last year. And then if you've seen some of the forecasts going forward, kind of this gradual increase, but not a dramatic increase in the years ahead past 2024. Lawrence Yun from NAR also said job gains, steady mortgage rates, and the release of inventory from pent-up home sellers will lead to more sales. Given the lingering housing shortage, home prices will march higher, albeit at a much more slower than in the past. Over the last couple of years, we've been in this market where home prices have risen quickly, maybe even I would say at an unhealthy rate. And he's saying, hey, that's going to continue to home prices are going to continue to rise, not at that pace, at a much more a slower rate than what we've seen in the last couple of years. And I would say a much more normal rate, given the historical context. So what's the latest forecast for 2024 home prices? Right here, the seven that we follow: Fannie Home Price Expectation Survey, MBA, Goldman Sachs, NAR, Zillow, Freddie Mac, 2.9% residential home price appreciation this year. I think there are a couple of things happening right now. One, you're seeing a less aggressive posture by forecasters. They've sort of come off some of their forecasts. That average over the last couple of months was up above 3. Now you're seeing a 2.9. I think we'll see somewhere between 3 and 5% residential home price appreciation in this country. But no doubt, I think this is important at the macro U.S. level to help people understand prices are not, following. There's not this crash in prices that many have sort of, said, hey, that's coming, or this is what would happen. Now, depending on the market that you're in, the price point that you're in, you can say, okay, here's what's happening nationally, but here's what is happening right now in our market. Jessica from NAR said this, and I think it's critically important. One thing that seems to be pretty solid is that home prices are going to continue to go up. And the reason is that we don't have enough housing inventory. The lack of homes that are out there for sale keeps the upward pressure on prices. And that's always going to be the case. Depending on where you look, we're somewhere between 2 and maybe 5 million homes under capacity or under inventory in this market. There's literally not enough homes for the number of people that want to buy them. And I think that's something that we have to keep our eye on, and that's going to continue to keep pressure on prices. And that's really one of the things coming out of the last couple of years where we had unhealthy home price appreciation. The thing that sustained it is the lack of available inventory. If you even make the comparison going back to 2008, you had a massive flood of inventory come into the market, and that drove prices down because you had an oversupply. Even looking at the numbers right now, if you were to see an uptick in foreclosures, which we're not, all of those homes would be gobbled up by people that are looking to buy. There are more people that want to buy than there are the number of homes that are on the market. The thing that I believe will be a driver in this market are mortgage rates. We live and work in a demand-based rate environment. You've seen that graphic that we've used based on where rates are at. I think there are a couple of key sort of points that we want to look for. 6.5% on 30-year fixed. I think we go below that, we'll see good demand. We dip our toe into the 5s, we'll see probably great demand. People just psychologically saying, hey, mortgage rates are down in the 5s again. But what's the latest forecast as of June of this year, as of this month? Fannie, MBA, NAR saying by the fourth quarter, by the end of this year, maybe around 6.5% on a 30-year fix, maybe 6.5, 6.75, depending on the flow of this. Now, we talked last week about the election cycle, how rates have come down in previous years in an election cycle. I do believe we'll see a little bit of relief on the 30-year fixed coming in. And even if you take this forecast beyond, and I'll show you in just a minute from MBA, getting somewhere to dipping our toe into the 5s by the end of next year is what forecasters are saying. Here's what this looks like graphically. You see kind of the quick run up in mortgage rates and where we sit right here, wrapping up the second quarter of 2024. But the forecast is that rates will continue to come down. From that, we'll see more people say, hey, we paused our search because of affordability or because of high rates, and we want to get back into the market. I think a lot of that is going to depend on many, many factors, but one of the big factors is what will the Fed do? What will the Fed do relative to the Fed funds rate? There's a lot that hinges upon that, and they don't have control over mortgage rates, but overall, it'll be a sign economically that we're starting to make progress through some of the issues that we've had in this country, economically speaking. And I want to give you sort of a consensus from major banks on what they say the Fed will do. Coming out of the last meeting, they said we'll probably cut rates one time this year. And so when you think about this, you look at what the Federal Reserve is going to do, and the overwhelming consensus by all of these banks is that in the fall, specifically in the September meeting, is that the Fed will cut rates. So we'll wait and see if that happens, but I always want to give you what are experts sort of saying about the trajectory of this market and what they see. I think it's going to be largely dependent upon what happens there, and that certainly doesn't. It's nothing we can control. There's nobody on the deep dive this morning that can control the Fed or mortgage rates. Our job right now is to be able to guide clients forward and give them the best advice given all of this. Okay. Give you a few quotes that I think really sum up this market well. Al Lord from Lexard Capital Management: projected inventory increases are attributed to improvements in mortgage rates, which will motivate current homeowners to move up the ladder of housing and demographic shifts as older Americans are downsizing. So what he's saying there is mortgage rates come down. As we see that happening, we'll see folks jump back into the market. Maybe they'll say, you know what, I know that a 3% mortgage is not coming back anytime soon. I want to go ahead and make the move because we have a growing family, or we're going to downsize, or we're going to get closer to our kids. Whatever the case is, certainly that will drive more inventory. Dennis here from the City University of New York, he says this. It's a really good quote, I believe, that sums up where we sit in the market. When it comes to the real estate forecast for the next 5 years, I'm cautiously optimistic. I believe we're going to see a lot of ebb and flow over the next 5 years, some highs, some lows, but overall a healthy market. That's key right there. Prices should continue to rise, though more slowly. We've heard that as well before. And buyers might enjoy more options as inventory expands. But remember, real estate is profoundly local. What happens on a national scale can manifest differently in your backyard. I've said it many, many times. Our job as professional agents is to understand the macro U.S. real estate market and then be the expert in our local market. We give you all this information with KCM Local. If you're not using KCM Local, I want to encourage you to do that. So that you can say, hey, here's what we're seeing nationally in real estate. Maybe when you turn on the news or read the news, that's what you hear. But well, here's what's happened exactly where we are at. And that is our job right now in this environment. Bankrate says this: the complexity of the current conditions mean that now more than ever, it's smart to lean on the guidance of an experienced local real estate agent. If you want to enter the market in 2024, whether there's a buyer or seller, let a pro lead the way for you. Couldn't have said it better there. I think, with everything, all the noise in the market, with NAR and everything out there that maybe some consumers have heard, we need to be vocal about here is what's happening in the market. And, what we want to do every week with the deep dive is give you a topic that we can go deeper on, what we believe is the most important thing in real estate, then give you the resources to be able to share that. A couple of weeks ago, we had a chance, and I think we talked about it on the deep dive, where your job is to sort of accumulate knowledge, build the foundation of knowledge, then share that knowledge, and then engage on that knowledge. That's really a hierarchy of how you want to be in the knowledge broker business, right? I want to gain the knowledge, I want to share it, then I want to engage all those that I'm working with on it. The resources that we have for you this week: blog post, what's ahead for the second half of the year, social post on prices, on rates, on sales, what's going on there, and a real talk script that gives you the words to communicate exactly what's happening in this market. As always, we start off the deep dive every week talking about what we believe is most important topic in real estate. If you're a KCM member, You can go into the member area, into my KCM, grab all of these slides and use them. Use the forecast slides in anything you're doing. Maybe it's a buyer presentation, maybe it's a seller presentation, maybe it's just with your team, but get that information out there. As always, it is wonderful to have you on the deep dive. Thank you for joining this morning, and we will see you back next week. Take care.